I always love coming to events, Chris's events, because he keeps it real, and we talk about the stuff that matters, right? And the stuff that nobody wants to talk about, money, politics, religion, freedom, like the kind of stuff they tell you not to talk about at the dinner table. That's the stuff we talk about here. It's the stuff that's important, and we with a heavy focus on real estate. So hopefully Chris doesn't ask me the questions that he knows sets me off. So we'll keep it real estate driven. So, fixing and flipping, wholesaling houses is how I started. I sold copiers door to door out of college for Xerox. So that's how I first started, commission-only job, just knocking on doors, and then cut my teeth there, got into the wholesaling space, helped a couple partners scale that business up. We did quite a bit of wholesale and flip deals, and then ultimately figured out that hamster wheel created a big tax problem for us, not to mention there was no residuals. And at the end of the year, after you do 160 deals in 1 year, which is what we did, you have to go back and do it again, right? Not to mention the tax implications and everything. So started taking the money that we had, the active income that we had from wholesaling and buying small apartment complexes. Bought a 14 unit was my first deal, actually with big Eric Hensley right there. Bought a 14 unit with Eric. And then I bought a 21 unit, and then I bought a 27 unit, ran out of my own cash from wholesaling and flipping. So but I didn't want to get back into the game. I wanted to continue to scale the apartment and commercial real estate business. So then I discovered syndications, did a 506B syndication on a 49 unit, did a 506B syndication on a 65 unit, then did a 506C syndication on the 93 unit. And to date, I've done 25 commercial transactions, 14 syndications. I've taken 15 properties full cycle, average of a 26% IRR to my investors on all those deals. We're buying a lot of mobile home parks right now on the side. We closed a 355 unit deal today. I wired the money this morning.
That's this morning. That's why I had to shuffle things around to fit his schedule.
I was at the closing thing. He's like, what time are you gonna be here? I'm like, I gotta get this wire out, and then I'm on my way up. Closed a mobile home park last week. I've been closing a mobile home park, at least one a month for the last 6 months for sure. And then, just scaling the business up. Just, he had some kind words about you guys. I have a lot lofty goals, and I'm nowhere near where I want to be, but I always love to take the opportunities to take the lessons that I've learned through doing 25 commercial transactions. And if I could just give you one tidbit that helps you avoid making a 6-figure mistake or something, it's all worth it. So anything I can provide.
Yeah. And that's where we're here today is, we could talk about the glory and how awesome it is to be a real estate investor, but the real lessons are learned in some of the mistakes, which we all got mistakes. So let's get into that now, because you right now you have a portfolio about 130 something million right now.
135 million is the assets under management.
Under management, damn near you probably wholesaled and flipped over 500-600 houses. 400. And so you have a very broad range of experience. Knowing what you know now, and I don't know if you've heard me talk about my progression where you start off with wholesaling, raise private money, then you flip, then you do buy and hold, then you do land development. You did that naturally. So you started off with wholesaling, right? Mm-hmm. That prompted you to learn how to find deals and negotiate and be a good marketer. Talk about how important it is to know how to find deals.
Yeah. There's two ways you can gain equity, right? Because it's equity. You guys are chasing equity in deals. That's the most important thing. Number of doors is cool and sexy, but there's people, bullshit gurus on the internet, invest in one LP in like a 2,000 unit syndication and say, I got 2,000 doors. Like, how much equity do you have in doors? So being able to find and negotiate good deals right now is the main driver to gain a lot of equity. That and being able to raise capital. Those are the two hardest things in the market to do right now, is to raise money and to find deals. And I mean, we just finished a $12 million raise. It's the hardest time in the last 10 years to get anybody to open up their checkbook and write a check. Everybody's on pins and needles. They're waiting to see what happens in November. A lot of things going on in the world. So it's tough. But if you can raise capital and if you can find deals, those are gaining the most amount of equity. So
I'm going to interject. What did I tell you guys the most important thing was yesterday? What he just said, right? And we never talked about this. It's just, we know that instinctively. Mm-hmm. Raising money and finding deals is the most important thing. That's a superpower.
Yeah. And I got people that are like, I'm a great asset manager. I'm like, what does that do me? Like, I'm going to come call you to manage. Like, if you can't do one of those things, people think that, just because they're really good at spreadsheets and underwriting, they're going to get picked on the team, on the GP teams. Like, that's not enough of a skill to warrant a slice of equity that just because you can input data into an analyzer. Now, you got to be able to manipulate underwriting and stress test the deals and move the levers. There's an art to underwriting deals, which everybody needs to understand how to do that, right? But at the end of the day, if you can find good deals, off-market properties, or if you can raise capital, you're going to get a good slice of equity in properties right now, because that's what we're looking for.
What are you doing right now to find good deals? And then when you finish with that, what are you doing? What's best practices to raise money? Because that's the two toughest things right now with the market pulling back.
So 50% of our deals come from broker relationships that we built over time. Those take a lot of time, a lot of nurturing, a lot of massaging. The other 50% come from our direct-to-seller marketing efforts. We locked one up yesterday. It was 95% owner financing, 5% down, $600,000, putting $550 down. She's holding it on a 7-year term. A 20-year term at 7%, 40-year AM. So she came from a text message. The one we closed a couple weeks back, that one came from ringless voicemail. We've gotten deals from letters. The one that we contracted yesterday, she actually said, I have this in a text message screenshotted because I sent it to my team. And I said, this is why we do what we do. She said, you guys have been texting me for 2 years. 2 years I've been texting this woman on drips. She's been on my drips for 2 years. And she finally reached out about 30 days ago, and we locked it up yesterday. So you guys have to plant a lot of seeds. And I think that is what gets most underestimated in this game, is the amount of activity at the top of the funnel that you have to put in. The amount of marketing or offers that need to go out, the amount of deals you need to look at, all of it, you need to 10x your numbers on what you realistically have to do in order to get a deal across the finish line. We're looking at 200-300 deals sometimes to buy one. And I'm not saying it's going to take you that many. You might look at 30 and get a good one and get lucky, but wrap your head around the fact that you need to look at 300 and start towards that goal. Because activity at the top is what I see most people get burnt out. They think this is a sprint, and in like 30, 60, 90 days, they're going to have a deal if they put their stake in the ground and say, I want to be in commercial real estate. Well, guess what? There's 100,000 other people that want to do what you're saying you want to do. So your activity needs to be that much better, and you need to be that much more skilled. Because skills, now when you get that, when that lady calls me, her name's Patricia, that we've been texting for 2 years, now it's game time, and you got to be able to close. And you got to be able to have the skills to negotiate a 5% down deal. And the only reason I'm able to negotiate a 5% down deal is because I know what questions to ask. I know what objections he's going to come up with. I know what her equity is and what her problems are. And if I pay her cash, I know what problems I'm giving her: a taxable event, lack of cash flow. I'm giving her more problems if I cash her out. So making her an offer like I did solves all her problems, and I'm proactive in that. So you got to skill up on sales.
Skills do truly get the deals.
Dude, skills get the deals. I mean, I believe that I'm one of the best negotiators in the fucking country. Truly believe that. And it's because I'm not trying to be arrogant, it's because I know that I've done the work. I've listened. How many of y'all have listened to your own sales calls on recording? Good. You should be doing that. I've listened to thousands of hours of my own sales stuff. I've listened to thousands of hours of other people's sales stuff. So that's watching game film. Tom Brady doesn't go to the Super Bowl without watching game film. And if you're not watching your own game film and practicing, it's not just about reading the sales books. It's about reading the books, then implementing the strategies, and then listening to yourself implement the strategies, and then tweaking. Socratic questioning, mirroring. Are you stepping on your questions? Are you interrupting? You don't hear yourself talk if you don't listen back to it. And it's fucking cringeworthy the first couple times. Yeah. It's cringeworthy. I went back, my first podcast I ever did, I was like, oh my God, I can't believe I said that. But that's part of it. Yeah.
Do you pick up on what he just said and what I told you guys yesterday? And by the way, I didn't talk to him. We didn't talk about each other's speech. No. We just met up. What did I tell you guys yesterday about being highly confident? And are you humble? Is it the word? We looked at the word humble.
I think it's safe to say I walk that line. But even if I think about if I think about that for myself going into a sales call, I'm pretty dangerous, right? If that's what I truly believe about myself, that I'm truly dangerous. And it's not because I shove sales down people's throat. Sales is asking questions. Sales is listening twice as much as you talk. Sales is being emotionally intelligent enough to shut the fuck up and listen to somebody. Sales is being able to sit across from somebody and need to know if they need Dr. Phil sitting across from them or they need Dave Ramsey sitting across from them. What hat do you need to wear? Do you need to wear, are they a super emotional seller where you need to sit back and just let them kind of just drum up their own emotion to then make decisions and you just need to be the Dr. Phil kind of approach? Or are they a super logical buyer? Like in commercial real estate, super logical buyers and sellers are prevalent. Like me, I'm very logical by the numbers. In residential, single family, when I was in that world, buying houses, it was very emotional.
Yep.
That's why I like commercial real estate. I'm much more logically driven from my decision making.
Yep.
But you need to know that going into a call. Is this person in an emotional state or a logical state? Because I'm adjusting my sales approach. Someone that's logical, I pull my calculator out and I'm sitting there hashing out details on the deals on the phone with them because they're numbers driven, they're logically driven, and if the deal fiscally makes sense, they're going to do it if it makes sense for everybody. But like if you take that approach with an emotional seller, you're going to talk over them. And if you take an emotional approach with a logical seller, you're going to tell you fuck off because you're going to be trying to create distress, and there is no distress.
And the reason you didn't pick up on, because weren't here yesterday, but actually you were humble, because the definition of humble means thinking lesser than yourself and that you're not worthy, right? And I was telling them they have to have supreme confidence in negotiation when they're dealing with sellers, or sellers are not going to want to deal with you.
They feel it.
They feel it. So I was telling them when they walk around, being unconfident and saying, oh, I'm just humble and this and that, that's all bullshit.
You need to be bad.
You need a bad motherfucker.
Yeah.
Yeah. You got to be willing to slit throats and kiss babies all at the same time.
I love it. Yeah. Yes. Yes to that.
So you see how skilled he is. Why do you think he's so skilled? Bruce Lee once said, I don't fear the man that knows 10,000 moves. I fear the man that's done one move 10,000 times. This man has done one move 10,000 times.
It's reps. It's
reps.
just reps.
That's all it
you guys
is.
got to get some reps in.
Yeah.
That's it.
Then it turns into pattern recognition. Because then you can predict, engage when people say stuff or are about to say something just from being on the phone tens of thousands of times. You know what they're about to say and how it's going to come out and where you're going with the conversation.
Yep. Yeah, and getting people to elaborate, like those are all techniques that you can learn. See, I get people that are like, oh, I'm not a salesperson. I'm introverted. Well, believe it or not, naturally, I'm pretty introverted too, but I can flex and be an extrovert, and you can learn sales. Like you don't have that. You're not born a salesperson. I think nobody's born that way. Like you can, everything that I've learned, all the strategies and techniques that I practice and that I've taken these reps on, I've gotten from books. I've learned them. And then what you do is you take your own authentic self and you sort of morph all those strategies and techniques that you learn into your own authentic way. So I'll take a piece from Jeb Blount, I'll take a piece from Chris Voss, I'll take a piece from 𝐸𝐸 and like all these great books, and then I'll just kind of morph it into the Chad King model that is authentic to me. Because if you try and be inauthentic, they're going to feel that too. Yeah. That's why I don't like the scripts, because they can feel it, right? So the authenticity needs to be there as well.
That is so good. That is so true. Because when you study great people, and you make it your own, it goes through your personality and it becomes authentic with what you just said.
Yeah.
That's why I'm not a big believer in scripts either, because it doesn't come out natural.
Yeah, and there's something to learn from each one of those books, but you're not Jeb Blount, you're not 𝐸𝐸, you're not Chris Voss. So just be you, but take the strategies that work from them and just make them yours.
So good. Now let's talk about, we talked about, being authentic, selling, finding deals. Let's go to the private money side, because that, I was telling them earlier, if you can raise private money, that is a superpower in real estate, and you can literally go places that the average human being just can't go, because people trust you with money. Don't bullshit yourself. Money is just energy, guys. They trust you with power. You want to know who somebody is? Give them a bunch of money. All it does is magnify their personality. If you're a piece of shit, you're going to be more of a piece of shit. So when people trust you with their money, they know that hey, this is a guy that I really like and trust, and I trust him. So to become that person, what can they do to become that person that people trust with their money?
Do what you say you're going to do. That's the biggest thing, is integrity in this space. Do what you say you're going to do. And it's a long-term play, right? So raising money, it's not something you wait to do till you have a deal. People are often, I hear that phrase getting thrown around, like, find a great deal and the money will come. No, it won't. Because if you don't have any relationships for people to fund deals, and now you got one closing in 60 days and you're straight cold calling people trying to introduce yourself and get them to trust you enough to give you their hard-earned money in a 60-day window, you're going to lose, right? Money raising is something that's done years. It's done in years, and you need to start raising money now, even if you don't have a deal. Even if you're not even like you're a year out from even being into Evolved where you need that kind of money. You need to start raising capital now, so that when you do get a deal, these people know that they know who you are, they know that you've been hunting for an opportunity, and then they're going to invest in somebody they like, know, and trust versus a new relationship. So you got to be planting those seeds now. I have great relationships with co-GPs that raise capital. You don't have to do everything together. You guys met one of my business partners yesterday, Jason, who runs a lot of the operations for our deals too. I mean, I have a lean team, and we operate very lean internally, but I have a lot of partners. And I have partners on almost, of the 25 transactions, probably 20 of them. I have allies on them. I have partners. I've partnered with Eric on 4 or 5 big deals. Like, we have partners, and I think that you have to bring something to the table, obviously, number one. Number two, sometimes the best ability is availability. I've found, just there's a lot of stuff to do. So, and then just continuing to skill up. But you do have to have partners. Date before you get married when it comes to partnerships. Please don't just start an LLC with somebody and say we're going to go 50-50 on everything. Like, do a deal with them.
You don't partner with your best friend from high school?
No. Going because an LLC is created, we're talking specifically about commercial properties, right? If I buy a mobile home park or if I buy a storage facility or an apartment complex, we create an LLC to buy that entity. Now, if I want to partner with somebody, I'm going to bring my LLC or my name, and he's going to bring his LLC and his name, and we're going to own that LLC that owns that specific asset together. And if that works out, maybe we do another one, and then we can start to determine if this is like a business. One of the big mistakes that I saw, we scaled a coaching business up. We just winded that thing down. We were all across the country, so many fingers in different pots in it, and everybody was partnering with each other, and people were losing money, and like it was just like, what the fuck are we doing? Like, let's scale back, focus on what we're good at in our backyard, and because people are just so quick to get in with because they want to do a deal where you got to focus on building yourself up first.
You just said something really good that a lot of you guys are going to blow yourselves up on. And that's getting so aggressive on wanting to get a deal done that you make a bad deal. I see this all the time, even with y'all new students. Y'all come to every deal that you look at is not a deal, guys. And it's not even from a perspective of if it's in a good area or not, but who's running the deal?
Most of them are good deals.
Yeah, most of them are good deals, but who's going to run it? Mm-hmm. That's the most important piece, too. Let's talk on that, as far as underwriting and, operations, because I find at this time and point, it's pretty easy for me to find deals. It's pretty easy for me to raise money. What's hard is getting the right ally there to frickin' make sure that this thing goes right.
Yeah. So from an underwriting perspective, this is where a lot of people miss, right? You go walk the property, you're caught in the hoopla, and you're looking at the deal through a rose-colored lens because you're all in the excitement of the deal. Like, oh my gosh, this property is beautiful. I want to own this, right? But you need to fall in love with the spreadsheet. You need to fall in love with the numbers. You need to fall in love with, like, I am trying to kill every deal that comes across my desk. I call it beating it with the ugly stick. I'm hitting that thing with the ugly stick as many times as I can, trying to stress test. I'm stress testing right now. I'm stress testing my rent levels significantly. So no rent increases over the first 36 months, what happens? Okay, I'm stress testing my occupancy. If occupancy goes to 70% economic, do I still cover my debt service? I want to see what my DSCR metrics are when I'm underwriting my deal. So I'm stress testing rent levels really crazy right now because we're seeing rent suppression in some markets, depending on what markets you're in. We're seeing rent levels actually come down. And a lot of them are stagnant across the country. It's all market specific. But I mean, I own a property in Nashville, Davidson County. We've actually had to bring rates down, all right, to compete because there's so much absorption. 35,000 units got absorbed into the market over the last 24 months, right? So we're having to compete with that. So stress testing occupancy, stress testing rent levels, and I'm stress testing my exit. To Chris's point, takeoffs are optional, but landings are mandatory. You have got to exit that property at some point, especially if you're buying it with investors' capital. This whole, like, I'm going to give this property to my grandkids, fuck you are if you're buying it with other people's money. They want their money back at some point. So when are you going to exit? How much are you going to exit for? Who are you going to exit to? And where is the market going to be when you exit? And what does that look like? Right? So people are coming in, when I look at deals, people are overinflating exit prices right now to the point of, like, it's not 15, 20% growth like we saw in 2019, 2022, where everybody touched turned to gold, and it was a candy bar doubled in value like in 2 months, right? People were that's gone. So if you're buying on that kind of appreciation and those kind of like hikes, you're going to get crushed. And if you're buying that kind of stuff on bridge debt, you're going to be in Chapter 11 bankruptcy in 24 months. You are one good deal away from financial freedom, and you're one bad deal away from Chapter 11 bankruptcy. That's how close you are. I'm not saying that to scare you. I'm saying that to tell you, like, this, you need to be selective about what you're doing and get into good deals right now with good operators, like you said, because 80% of the success of the investment is depending on who runs the deal. When my LPs are investing into a deal, they can come and meet us and walk the unit and walk the property because they're 80% of their investment's going into us and our ability to run the project. So the deal, I've seen bad operators screw up great deals, and I've seen great operators turn shit into gold. So those are some of the points.
We said something good. I want you guys to just imprint that in your brain. Try to figure out how not to buy that deal. Every time, you said something about stress testing, and look at every angle. Try to figure out why you shouldn't buy it. And you can't figure out why you shouldn't buy it from every angle. You try to punch holes, then buy it.
Yeah. We underwrite our deals 3 times: worst case, most likely case, and best case scenario. And if the deal hits the green metrics for our investors, 15% IRR, 6 to 8% cash on cash return, 17 to 18% average annual return, 2.2 multiple over 7 years, 2x multiple over 5. If we can hit those metrics on our worst case scenario numbers, I'm doing that deal all day long. And feel confident about it. Don't worry about the interest rate. Don't worry that the interest rate is 8% and it was like 5, a couple years ago. Who cares? It's fake money. If the deal, now you may have to offer less money than you could offer 2 years ago, right? You got to make sure that the debt service covers, but don't worry about if it pencils with today's interest rates, do the deal, assuming it's not crazy bridge that's got a 12 or 24 month.
You said something we're going to kind of jive into. You said fake money.
No.
I was talking to them about debt cycles. Where we're at, knowing history, the political environment we're in. We've never been here before as a country. We're printing money faster than we're taking it in. We're going to have a sovereign debt crisis. That's just, frankly, the government's ran by a bunch of criminals. We all know that. Anybody that's smart enough and has got brains can see that. Nothing makes any sense. What is Chad doing to navigate this shit show that's coming? Because we know something crazy is going to happen in the next 6 months or less. Something has to. What is Chad doing to navigate this and being careful to where we don't, get tripped up? Push on the spot.
Yeah. All right. They're going to create as much chaos as possible in the next 6 months. Okay. Shit will hit the fan. Now, I'm planning for two scenarios in my life right now. Okay. I am buying as much real estate on fixed rate debt as possible with the hope that Donald Trump gets elected, right? And first of all, I'm not a Republican, I'm not a Democrat. I think both sides of the aisle are fucking bought and paid for. The whole fucking system needs to go. Left ring, right ring, it's the same bird, okay? And it's until you realize that it's that same bird flapping, you'll forever be trapped in this cycle. Now, to mention the financial enslavement that we're all completely under is a whole separate thing, because paying the tax rates that we pay, we're essentially financial slaves. So until you get out of that matrix, you also can't be free thinking. So that's what these are about. These masterminds are about breaking you out of those cycles and those matrices so then you can level up. And that's a whole, the financial piece is a whole nother thing. The Fed creation in 1913, the freaking them taking the dollar off the gold standard in 73, all of it has led to the big bubble that he's alluding to that will pop at some point. Now, if it pops 6 months, if it pops in 2030 when I think it's going to pop, if it pops, at some point, it will. And you're going to wish that you had owned more real estate, more hard assets, especially ones that produce income. I'm buying as much of that stuff as I can. We're buying mobile home parks, buying good apartment complexes, B2C class properties, 80s, 90s, 2000s product. My average rental price point is $1,200. I will always have a renter. I'm 94% occupied across the portfolio. And I believe in that stuff because everybody moves down in a recession, and I'm sitting at that $1,200 price point just ready for all those A-class and B-class people to rent my stuff. I'm loading up as much of that stuff as possible. My other strategy is I got a place in fucking Latin America, and I'm out. You guys won't see me again because this whole system's coming down.
Yeah.
And when it does, it's going to be ugly.
Well, and you got two collapses here, guys. You've got the financial collapse, which I do think is probably going to be closer to 2030. I'm alluding to a political. You're going to have a political collapse because you got one power going against another power, and neither one of them are going to want to give up. That's why I'm telling you, don't put your head in the sand. Something stupid is going to happen here.
So real estate and politics go hand in hand. You can't have one without the other. You guys are sitting in a room interested in real estate, but it's directly affected by the socioeconomic situations that happen in our government because the Fed responds to how that's working, right? So you can't ignore one and be like, I don't talk about politics. Well, it directly affects everything you're doing, because if the Democrats get in again, we could be looking at potentially double-digit interest rates, which we've seen before in the 80s, and it's very possible that they could just accelerate the triple war that we're fighting and the hyperinflation, and they could accelerate it all, and we have double-digit interest rates, mass collapses in the banking system, and your cash is worth nothing. That's very possible. The other option that I see that I hope is going to be the case is that Trump's going to get reelected. First of all, I can't believe that in the last 8 years we haven't come up with two fucking better people than this old man with dementia and the orange polarizing guy. Okay, but from a fiscal standpoint, y'all better be voting for Trump, because it's like, fuck, guys, what's the alternative here? Like, seriously, it's literally, I mean, not to go into it, but he's not even a real person. They're just parading the guy around like it's a communist fucking, like, crazy. So
Weekend at Bernie's.
It's Weekend at Bernie's.
Who's seen Weekend at Bernie's?
He's literally like, I mean, it's just a bunch of backroom deals that have been done over the last 30 years, right? It's a bunch of backroom deals that have been done over the last 30 years, and they're just honoring those deals and creating the war machine, and it's like all that shit's still going on, right? And until the whole thing comes down, Trump's got to get in. I mean, specifically for the economic growth and the international relations. And those are the two above the line items. Everything else is below the line. Guys, we argue about the dumbest shit. I'm off social media. I haven't been on social media, and I mean, like, I go on there to look at you and see what you're up to, but like, I don't have time to argue about below the line issues that they try and rile us all up against. And that's what they do, right? They rile us all up. Race, gender, sex, frickin' all this stuff. It just, every time they're shaking this jar. And y'all need to start worrying about above the line issues, which is your personal economics, your financial health, your home. Is your home in order? Because the greatest rebellion, okay, the greatest rebellion is independence. Financial independence, health independence, wealth independence, not needing anybody for needing anything, being able to do whatever you want, whenever you want, with whoever you want, forever the fuck long you want, without having to ask anybody fucking permission. That's what you all need. You need that sort of financial independence. So when the government comes in and puts more oppressive stuff in, because we've seen the oppression that they can push down, you can just go like this. And that's what I want for you guys. I want you to be able to just have allies that are moving the needle, and then not be able to, you're not beholden to anybody. And that's why I believe real estate's important. So Trump gets in, he's going to bring back 100% bonus depreciation, most likely. He says he's going to do away with the income tax, which I think income tax should be flat 10% across the board. Nobody gets out of it. Nobody can circumvent it. It's flat 10% for everybody. And you file a tax return, you get to vote. I mean, there's a whole thing we can do to fix this whole thing, but it's deep state's fucking deep as shit right now. It's going to be tough to fix. But he gets in. I think we have another bull run in the market. So Trump gets in. He'll bring back 100% bonus. I think they'll start bringing rates down in 2025. They'll start to bring them down. You're not going to see any rate cuts till 2025, but they'll start to bring them down, provided he's in office, in my opinion. And then I think we'll see, 2026, 2027, we'll never see rates where they were in 2021, 2022. I think those were just like fake low rates. But we'll get back to a 4.5%, 5% environment. There's going to be another bull run. And then my prediction is by 2028, 2029, I think we're just bottom out.
They'll have to.
So I'm buying as much as I can now, and I'm planning some exits and some big refinances in 2028, 2029 when I have some maturity dates, and I'm just going to hold everything I can. And then if the Democrats get in, like, I'll probably just sell all my stuff. I'll be in Costa Rica. You guys won't find me.
Do you rent to Democrats?
Yes. All the time. Yeah. No, I mean, well, I don't want to get too in the weeds. I want to make sure I give you guys tactical stuff, because we all know what's going on. Like, we all know that it's bullshit. The way out of it is to buy as many hard assets as you can, because that is digits on a screen are only digits on a screen till you make them real. Right? And I have money in the stock market. I like other financial things. I'm not just real estate. It's like 85% of my portfolio, but I have other things that I invest in. But like, I make money in the stock market. But as soon as I make those gains, I take those gains then off the table, make them real, and then go buy something. Like, I made $25,000 on some trades, went and bought a mobile home trailer and rented it out for $1,200. That's wealth. It's not keeping that 25 in that brokerage account and trying to double it again, because then you can lose it. It's a casino.
Where in Latin America do you have a place?
Costa Rica. Yeah.
We narrowed it down.
Yeah. Go ahead.
What is the significance of that date, and what economic factors are you considering when you think about a potential real estate
in 2029.
Yeah.
I'm looking at the overall, to be honest with you, I'm looking at the currency in general, the US dollar. Right? That to me is what is the most volatile. And commercial real estate, let's break it down, because everybody sees these articles like commercial real estate's going to crash and all these banks are coming, maturity dates are loans. All right, that's Class A office that they're talking about, makes up a majority of that, right? You have Class A multifamily properties, which are experiencing very high vacancy, a ton of concessions, and a lot of them are going back to banks. So commercial real estate has a lot of underlying lanes, and certain lanes are still very, very good buys. Pad rent mobile home parks, BC class multifamily properties, self-storage in great areas. Like those types of products will withstand the financial storms. Class A office, look, you go downtown Nashville, that Batman building, that real big sexy building, it's 45% occupied.
Wow.
Yep, wow. $1.6 trillion of commercial debt's coming due in the next 18 months. There's gonna be huge opportunities on the table. Now, a lot of the stuff that's going back to banks right now is Class A, specifically office. And that's where you're seeing. So make sure when you read the articles, like don't let that scare you, like commercial real estate going boom. Like there's places to make money still. There's deals out there. We're doing them. You just got to know where to look. You got to know how to underwrite them. I went on a tangent there. Sorry.
No, it's good. This is real good. Y'all liking this?
Yeah.
Yeah. Can we still be frank with y'all and keep going? All right. Nobody's insulted.
You're in the wrong room if they are insulted.
Okay. Holden?
I'm probably not going to stop talking if you are
Can you
insulted.
elaborate on two things? So the first thing, we have bonus depreciation. I know how valuable that is, but you said it, and I don't know if everyone understands it.
Sure.
And then the second thing is lower interest rates, right? You said we're going to get 4.5%, 5%. I believe that too, but you're doing a deal today at 7%, 8%. Next year, it goes down to 4.5%, 5%. How quickly are you going to refi next year, immediately as the rates come down? Like, how quickly do you get out of a deal and refi it, or not necessarily out of the refi?
Two good questions. Number one, on the refi position. So I locked this morning, my loan with Fannie Mae is $24,507,000. I don't know where they got 7,000 from. $24,507,000 my loan is with Fannie Mae. I'm at 5.89% with no buy down this morning. So agencies got some good rates. If you can lock sub 6%, I'm on a 7-year term with 4 years of interest only. My community bank debt, I locked a deal. We closed 2 months ago. It was a 125 unit. We paid $9.7 million. I locked that at 7.95%. That's community bank debt. So your community banks are kind of around 8%, between 7.5% and 8.5%, depending on the play. And your agency is right around 6% if it's super stable. So that's kind of where interest rates are. You can't just like buy at 8% and then just flip out and refi when rates go down, because number one, you have prepayment penalties that are sometimes cost prohibitive. So like that agency loan that I locked today, I can't get out of that in the first 4 years without a real bad penalty. So I'm locked for 5 years. It's a 7-year term, but in 5 years I have some flexibility to either put a supplemental or refi or sell or whatever. So you need to keep an eye on your prepayment penalties, and you need to keep an eye on your prepayment penalties on those deals, and your equity. I'm sorry, because you can't just like refi out and take out a bunch of equity. Like banks are not even doing cash out refis anymore. They'll look at your stack and they'll intentionally lower your LTV so you're not pulling a bunch of cash off the table. Like that, I mean, 2-3 years ago, they were just wheeling out loans left and right. People were ripping cash off the table. I mean, we cash out refied that deal 3 fucking times, dude. 3 fucking times. We cash out, that's stupid. 3 times we ripped like $400,000, $500,000 out of that tax free. Like those, you can't do that anymore. And it is what it is, right? Or are you going to sit there and sulk because we weren't in the business when you were ripping that? Or are you going to move forward now with the rates that they're at, right? You got to just go. You got to go. Because the best time to buy real estate was yesterday. Second best time is today, right? The best time was 20 years ago. Second best time is today. So you just go. And instead of, planning. Now, here's what I do. I don't underwrite any refinances into my projects. So if I can refi in 4 years or 5 years, to my returns, that's gravy. If you are baking in a refinance to your deals and your numbers and your return metrics are predicated on that refinance, I would be very, very careful with your underwriting right now. Because that is what has burned a lot of people who bought in 21 and 22 at suppressed cap rates with short-term debt, thinking they're going to be able to refi out And now they look at their loans and they're staring at an 8% mortgage and they were baking in a 4.5% refi and they're underwater on equity. Man, guy bought a deal in Huntsville, Alabama. I just went and looked at it. Huntsville, Alabama, 184 a door. He paid $17.6 million for it. He can't get an offer for 12. He can't get an offer for 12. He watched $7 million of equity disappear because he overpaid. And he has a maturity date coming up in December. And that's called a cash-in refi. And those fucking sting. You think a cash-out refis are great? Cash-in refis will bury you. Because now you have to go bring cash to the table in order to get a new loan. So just refinances are gravy. Now to answer your costs, your depreciation standpoint, we had 100% bonus. It went down to 80 last year. This year it's 60% bonus depreciation. In my deals, if you invest $100,000, you're typically getting 35% of that dollar for dollar investment as a loss against your taxes in this calendar year. It's about 35%. It was 45% when it was 80% bonus depreciation. It was about 55, 60% when it was 100% bonus depreciation. Now, if Trump gets in, he's talking about doing it retroactive, which would be cool as shit. He's going to go retroactive if he can, but who knows? They're probably going to kill him before he even gets there. But if you can do, so 60% this year is the bonus depreciation, and if Biden gets in, they're going to pretty much wind it down. Now, a lot of Democrats own real estate, and a lot of his donors own real estate. I have a feeling he won't let it go away, but we're getting on 100,000 invested, we're getting 35% of dollar for dollar on 60% bonus depreciation. And my mobile home parks are getting way better depreciation and losses than anything. That's why I'm loading up on pad rent parks. We bought a park for $850,000. We put about $100,000 into it, so we raised $400,000 on the $400,000. $400,000 invested. This was last year. $400,000 invested. We got $612,000 of losses on $400 invested. It's 150% on the money invested we got as losses against our active income. That's called phantom income. That's real because that's money I don't have to pay the government. Yeah. I want to pay the government. I don't know if you guys have found this out, but I don't like the government. So I want to pay them as little as possible legally and ethically. And that's your duty, is to pay the government nothing legally.
Y'all remember what I told y'all yesterday about the most important thing about real estate is not cash flow? I make more money not paying taxes than I do sometimes in cash flow. Mm-hmm. And you understand that, what he just said?
Yeah. I mean, I had 2 years ago, it was like December 27th, and I was like, I had a tax bill, and I was pissed. I was like, no, I didn't get enough losses to offset the tax bill. I went and bought an RV, called it a mobile office on my tax return. Paid $50,000 cash, wrote it off, so I didn't have to buy the taxes. And I told my CPA, I was like, I'm going to take this thing around to other markets and, look at real estate. My family, we love it, take it all around. It was over 6,000 pounds, Section 179, that thing, and just mobile officed it.
See?
You got to think creatively. Now, I was able to avoid a $30,000 tax bill. So how much did that RV actually cost me? It didn't cost me $50,000. It cost me $20,000, and I got a hard asset.
When you know the game, I'm gonna repeat myself again. When you know the game, you can cheat legally, morally, and ethically. This is what he's doing, and you can do this in real estate and legally not pay any taxes.
Real estate's the best way to do it too. I mean, and all the people at the top are doing it. Like, everybody plays the game. The tax code is written with loopholes to be utilized, and I'm not that smart. Like, I got smart people around me too. CPA, good CPAs. Invest in a CPA. You guys doing TurboTax, knock that shit off. Like, get a good CPA, right? Because they'll pay. My CPA makes almost 6 figures just from my stuff, running our tax returns. But the amount he saves us is exponential to what we pay him.
You using a local guy or what?
I actually just switched CPAs. I was using one for about 4 years, and we kind of hit capacity with them with all the deals that we're doing. They're based out of Brentwood, and now my guy's in Murfreesboro. So yes, I use a local guy. But real estate focused. Like, if the CPA doesn't understand real estate, you're going to struggle, because when you try and play the game with the losses and stuff, they all get like skittish. A lot of them get a little skittish. So as long as they're real estate related, that's good.
Get you a CPA that owns real estate.
Yeah,
that's a real estate investor. Mine's a real estate investor. I haven't paid taxes in going on 9 years, but he's an investor too. He works it.
So when you buy your mobile home parks, are you, because technically you're buying your land and your mobiles separately, do you depreciate each mobile home itself, essentially?
Yeah, so the 𝐂𝐎𝐍𝐍𝐄𝐂𝐓 studies on we just depreciate the mobile homes, right? And you can depreciate 100% of them.
So that if you have 100 mobile homes worth 10,000 apiece, you could offset, you depreciate the $10,000 mobile on each lot.
Correct. But it's only a percentage of it, right? You can't just, yeah. But yes, all we depreciate it all.
Chad, are you doing just lot rent, or you have? Well, you did say you bought a trailer the other day, but are you doing some?
I do. I bought that trailer, and then I just signed a lease option. So she put $5,000 down, and the lot rent is $595 out there. She put $5,000. I paid $25,000 for the trailer. She put $5,000 down. She's paying $1,100, and $500 goes towards the principal. And then in 2 years, she's got a balloon for the balance, and she pays me that balloon. And then now I hand her the deed to the trailer, and then she flips over to lot rent and goes $595 with me, and then I recoup all my money. I put a little interest on there, and
but the parks you own, you're not owning the trailers at all.
I try not to.
Yeah.
That was what I was saying. That whole park is all pad rent, and I'm trying to get all pad rent parks. I have some parks where we own the trailers because we bought them.
Right.
But in that scenario, like, yeah, we're just trying to own the pads.
Yep.
Is my thing. You can make money, on the trailers, and the rental rate's higher, but your expenses,
Yep.
all the stuff that goes wrong with those things. I like pad rent. It's cleaner.
Yep.
Only a couple bills for water, sewer, and some common area stuff, so they're real clean to run. We run those in-house through our management arm, and we can talk about other businesses too. You guys,
Yeah.
there's
Well,
a lot of
I
other
want
businesses.
to talk about that too, because you're a lot like me. You're not just a real estate investor. You're an entrepreneur. You have other businesses. Let's talk about other businesses that are congruent and vertically integrated into real estate. That we talked about prior to this meeting.
So I own a title company. I own a property management company. I own an HVAC and plumbing company, and we have an insurance arm. So all of those are under the real estate umbrella. All right. We noticed that our biggest bills were HVAC and plumbing. Right. Those were our biggest bills on our apartments. We own 850 units within a 2-mile radius. Right. So that's in Murfreesboro. And we have stuff all over the place, but just within a 2-mile radius, we have 850 units. So I was like, man, our HVAC and our plumbing bills are just fucking outrageous. Why are we not doing this? So now we have an HVAC and plumbing company. We have 6 trucks going. We service residential homes and stuff to make profit, and then we do all of our own buildings at cost. Right? So we're able to drive down our expenses, therefore drive up the net operating income, make the property more valuable, and we can also control a lot more things. So home service-based businesses are great. If you can get into any service-based business right now, that's a good win. If you buy into them, that's awesome. If you start them, it's tougher, but it's still awesome. But if you can buy into existing businesses, I'm always looking to do that as well.
But it's easier to start up one if you already have all that in-house.
Correct.
Because you drive in revenue.
Yeah.
Directly.
Yeah, we didn't do that. So we talk about this a lot, but like staying focused in the beginning on one thing is far too many people, they hear kind of everything I'm saying, like I'm almost a decade in, right, to the real estate stuff. Like if you try and go too diversified too fast, you're going to spread yourself way too thin. Like I got people that, they're trying to do 7 or 8 different things and they haven't figured out the one thing. Like I figured out wholesaling to a fucking T, and I had that business dialed, and then I started buying apartments, and I figured out apartments to a T, and then I started buying other businesses. So it was like I was in it, and that's what you got to do is just focus. People come to me, they're like, I got 20 grand to invest. You don't have shit. You need to take that 20 grand, go invest in yourself, build more skills, stack 100, and then you can maybe do something. Figure out how to make more money first. That's step 1. You guys got to make more money, active income. We talk a lot about passive income and mailbox money, and like you don't get that until you can actually stack some cash. Because honestly, if you have 0 money right now, that's cool, great, starting point. I've been there. I've had $0 in my bank account, and that's awesome. It's a great place to be, back against the wall. Okay, you got to figure out how to stack money because the only way to get equity in deals is to work for it or to place it. And if you want passive income, this actual mailbox money, you're going to have to work your ass off to gain equity, and it's going to have to let that season for years and years before you can start to actually reap the benefits of passive income. Now, if you got cash sitting in the bank, that's a separate story. We should have a conversation after this.
You see, once again, you hear what Chad said, and once again, I didn't talk to this man before he came. I didn't know what we were going to talk about. We're just flowing this. He said things that I already told y'all because he's naturally went through the progression. He said, what, decade? You hear when he just said decade? I've been talking about decades.
It's a marathon, not a sprint.
Yes.
Too many people are thinking a
Years,
year,
2
like 2
years, yeah, dude,
Dude,
decade.
5 years before
Yeah.
you start to see any
anything.
real results. It's going to be 5.
Yeah.
But the thing that people get wrong is it's consistent actions today that are going to produce the result in 5. So that's the hard part, is it's that delayed gratification, which that's prevalent in our society, is the instant gratification. That's the problem with a lot of shit that's going on. Everybody expects everything right away, right? That patience to do the work every single day when you don't see the result year after year is what's ultimately you're gonna pick your head up and be like, damn, this is substantial.
And then you said another thing, that you mastered wholesaling, because I feel like I do truly. Wholesaling is elementary school in my progression. It's the foundation. It's the ABCs and the 1, 2, 3s of real estate. It teaches you how to find off-market deals. It teaches you how to negotiate. It teaches you how to market.
Yeah.
Which sets you up for the rest of all these asset classes. And that's, I believe this is why he is freaking crushing the game, because he naturally went through that progression, and he's raising money the whole 9 yards. And he's super smart, right? And he's dialed in. How important is personal development to you?
If you're not growing, you're dying. We all know that. If you're not waking up and getting better, you're getting worse. If you're standing still, you're getting worse. If you're not moving the needle forward, you're getting worse, because the world is moving. The earth is spinning. And I think personal excellence is the ultimate rebellion. Like,
That's so good.
personal excellence is the ultimate rebellion. Like, becoming personally excellent is what they fear. They being the people that are in control, right? They fear us being healthy, not, growing our own food. They fear us being wealthy, being financially independent, not needing them from anything. They fear us critically thinking, homeschooling our kids and teaching them how to think, not just what to think. They fear us being that independent. And if that's what they fear, that's what you should chase, is being independent. And when I say they, like, there's a big club, and you ain't fucking in it. So it's us versus them. It's not right versus left or many of the other shit they tell you.
What would you recommend to the younger guys who don't have a significant portfolio or credibility and they're trying to raise money to buy the bigger deals? Because I have a couple deals going on and I'm finding difficulty raising money because I don't have a big track record. I just kind of have my vision and my dream.
Mm-hmm.
So it's navigating that. What would you recommend?
In the beginning, I would be willing to take less equity to bring on a sponsor or a partner that has the track record and has the credibility to help boost yours. Too often in the beginning, we're so hung up on holding a majority of the deal that we're not willing to give up. Like, you should be willing to give up a good chunk to get it across the finish line so that you start to build your resume, so that 2, 3, 4 years from now, then you don't need those same partners anymore. And I think in the beginning, what I did was I bought one that I could afford with my own money with a couple other guys, and then I bought another one that I could afford, and I could have gone bigger, but it was just my progression to use my own cash to buy the first couple apartment complexes. As far as bigger deals, the truth is, you don't, if you don't have the resume, the truth is you don't have it. So don't fake it. If you try and fake it, dude, everybody's gonna know. The whole fake it till you make it, I understand having the confidence and the swag when you walk into a room, but at the end of the day, if you're gonna come sit with me and you're trying to do a $30 million deal and you need my balance sheet and you need my sponsorship, I'm gonna see through your bullshit if you're trying to think, if you're trying to project that you're somebody you're not. So be authentic, be transparent, be willing to give up. Dude, in that situation, I don't know how big, give me an example. How big's the deal?
2 million.
Okay. $2 million deal, you go get a $1.4 million mortgage, you raise $600,000. If the sponsor can bring the balance sheet, the guarantor, if they can help raise the money, if they're going to help you on operations, you should be willing to take 10% of that deal. Give up the lion's share for your first one, and then your next deal, maybe you don't give up, you give up less. And then by your fourth deal, you can sponsor it all, and now I don't have to bring on a sponsor. So just be willing to partner up early on, because it'll help build that resume so that the next time you go to the broker, it's hey, I just closed this project. And yeah, you got to be willing to give it up and partner with somebody who's already done it.
For you younger guys, just because we talked about confidence yesterday, but and to the fake it till you make it stuff, get so skilled and dialed in that you naturally come off confident through what? Authenticity, because of the reps and the skills, right? Just stack the skills. Put all that money. I know you wanted to buy, how old are you?
23.
I mean, it's awesome that you want to buy a $2 million deal, and there's nothing wrong with that. You can go ahead and do that. I'm not going against that, but from 20 to 25, man, just go all in with personal development. That's what I did. 22 to even to this day, but just stack all these skills and I mean, y'all are doing personal development right now. You don't know it. This is personal development.
Yeah.
But
Yeah.
kind of wrapping up here. By the way, this is awesome.
God, it goes so quick.
Yeah, it does. My last question to you is, what does an ally mean to you, and how important is that in your journey as an entrepreneur?
I mean, you guys have probably heard this in the last 2 days, but you need allies. Like this, you're not going to be able to get it done by yourself. You're going to be your own bottleneck. You know, if you try and do this on your own, like you'll be able to get a deal done, but you might get stuck. Like you're going to be only be able to do so much. So you need to find good people. An ally to me is somebody who shares your core values. The reason I'll come to any one of his events, the reason I answer every time he calls, is because I know that he's cut from the same cloth. And when I look for business partners, and when I'm looking for allies to do other deals with, I'm looking at their core values, like what makes them tick. Because if your core values align, usually everything else will work out. You can figure out all the other shit as long as you have integrity, they're a good steward, right? They're focused on results, right? They like personal professional development. Like if those things in the core line up, the rest can usually just be talked through. It's a conversation. So an ally is someone that shares your core values, whatever they may be. You need to decide what those are for yourself. If you don't know what those are, you need to write them down. What are your non-negotiables? What are your non-negotiables? And write down your non-negotiables. So they share with those. I think an ally shares those with you. Man, loyalty and trust are two big things for me too. It's just someone who's going to do what they say they're going to do is the hardest thing to find right now. There's a bunch of fly-by-night people. I think this business, people weed themselves out. There's so many people that want to get in and talk a big game, but 80% of business is being done by 20% of the people. We all know each other. Like everybody who's doing it at a high level, like we all run into each other. We know each other, and we're all able to coexist and have other businesses and compete when we want to compete and still work out. So don't be a fly-by-night person. Don't be interested, be committed. I think that's the biggest thing. So many people are interested, but they're not committed. You need to be willing to do whatever it takes. And your allies will keep you accountable. And I think that's the biggest thing is I've had, I deal with the imposter syndrome. I deal with wanting to quit. I mean, I think about getting a corporate job. I thought about it like fucking a lot recently. We had this deal, this big deal that we were closing today. I had it, I'll tell you a quick story. It's a good one. I had an institutional investor lined up for this deal 40 days ago to fund it. It was a $12 million equity raise. The institutional investor was based out of New York, family office. They're worth $10 billion with a B, okay? With a B. They were writing a $10.5 million check. I was bringing $1.5 million. I signed an exclusivity agreement with them. I had $350,000 of hard money on this deal. We're one day before closing, and I get a phone call, and they back out of the deal. Pulled out of the deal. One of the committee members drove down unannounced. He flew down to Nashville unannounced, drove down to Murfreesboro, went out to the property on a Tuesday, didn't tell anybody. Out of New York, one of these guys, 4 guys, his name was Roger. If I ever fucking see him, I'll punch him. He went out to the property, and he was like walking around, talking to some tenants, and like people were like smoking on the porch stuff, and went back to his people in New York and described the property as rugged, and they called me a day before closing, pulled out. No penalty to them. So I had to call the seller on this deal and let him know what happened. And after they called me, I had in my mind, I lost $350,000, right? So I had lost that money. I was like, all right, I fucking lost that. It's going to suck. The seller says, I call the seller, biggest apartment owner in Tennessee, Dominion. I can disclose this. We're closed today, so it's Dominion, biggest apartment owner in Tennessee. I had to call the guy, the CEO, and tell him what happened. And the thing that allowed me to stay in that deal versus him taking my earnest money and move on was that I was transparent. I was honest. I told him exactly what fucking happened, to a T. Didn't bullshit him. Told him exactly what happened. I was honest and transparent, and I came up with a solution and said, if you give me another 30 days, I'll get this thing done. And he said, well, I want you to double down and put another $350,000 hard up. And then I had the pressure of going to raise $12 million in today's environment in 30 days to get the deal closed that we got closed today, right? So, and I had to put up another $350,000. I have $700,000 of my money hard if I didn't get this capital raise done. So that to me is just like, you have got to have some allies that are going to be in the fucking trenches with you, because my partner Jason, who was sitting here yesterday, was in the trenches with me on that deal. He's in the foxhole with me. And the purpose of that was the accountability partners. I wanted to quit. Like, I thought I lost that money, man. I was done. I was like, why am I doing this? Why do I have this stress? This ain't for everybody. I'll be honest with you guys. I have $90 million of debt on my name, personally guaranteed. You know what my monthly mortgage payment is? You know what my monthly nut is? $475,000 is my monthly mortgage payment to my lenders. Now, that's good debt. Don't get me wrong. There's a difference between good debt and bad debt. That's all good debt. It's paid by others. We collect a lot more than that. So that's a good thing. But this level of stress may not be for everybody. That's okay. I'm not telling you to go out and do a 355 unit syndication and do that kind of big deal and risk $700,000 of your money. I'm not telling you to do that. That might not be for you. I also bought a 17 unit mobile home park for $300,000 last week. That may be what you want to do, because that level of stress, I had $1,500 of earnest money up. And it got a little squirrely at the end with some title issues. I was like, well, if I lose this money, that may be your comfort level, and that's okay, because guess what? You can build financial freedom by accumulating those little deals. You don't have to go big. Don't think this these big sexy syndications are where you have to go. That is not the destination. I have made far more money and built far more wealth owning more of the smaller deals than I have having smaller slices of the big deals.
Yeah.
Okay? So just because I'm sitting up here saying it's a cool deal and we got it across the finish line, that's awesome, right? Doesn't mean that's what is your path as well. You don't have to do that. I just want to caveat that, because it's not for everybody, man. I got more gray hair than I.
What did I tell you guys yesterday? Everything this man's saying is what I repeated to you yesterday. This ain't for everybody. This shit is stressful, aggravating. It'll stress you, your manhood, your marriage, your mental capacity. But the caveat to that is it helps you grow too. It'll help him doing that. He's just stressing that mental, stretching that mental bandwidth. And once you get it done, you get to the finish line, fuck, I did it. And
You're far more capable than what you think. You can push yourself a lot further than you think right now. And I think even from what he's saying, what am I capable of doing? Whatever you think you can do, you could probably do 80% more than what you can do.
Yeah.
So don't be afraid to step out of your comfort zone. Now, don't put $700,000 hard on a deal that if you've never done one.
Yeah.
But don't be afraid to bite off more than you can chew, and then fucking figure out how to chew it.
Yeah.
Because your success in this business is going to be directly related to the amount of risk you can tolerate, and your success in this business is directly related to the amount of times you have said, fuck it, I'll figure it out.
Yeah. Amen.
Real quick, why do you continue to syndicate if you have better margins and more wealth creation in other vehicles? What is it that drives you to? Because I made this decision about, a month ago, just not to go down that road.
Sure.
Because I looked at everything and I'm like, man, this kind of sucks. You look at how many investors you can be beholden to, or, I just was curious, why do you continue to go down that road?
Because I'm going to make $3 million on that deal. I mean,
Right.
the
way I ran my numbers on this last 111 that we closed next week was we'll just use our money.
yeah, no, I agree with you, and that's why I caveated.
But how many of those can you do versus how many of those can you do?
Yeah.
Do I want?
Do you want to? That's the question. That's the question.
I want to know, I want
Sure.
to know your own personal, why do you want to do it if, by your own admission, you make more money over here?
Yes.
I'm
Yeah.
just curious.
Good. That's a great question.
Yeah.
So, self-admittedly, I'm a deal junkie.
Yeah.
I like doing deals, and I like doing big deals. I think it's fucking cool. I don't know. I like doing big deals. I know that we, theoretically we make more cash flow and stuff from the smaller deals, but I have a larger play in Murfreesboro specifically, which is where we've bought our last few syndications. So we have 855 units. I'm going to get to 1250, and then by 2028, I'm going to exit to a big REIT or a life insurance company. So I have a plan to get out. My game is not so I can just build. I don't care about my unit count. I'm building up a portfolio so that I can exit to a REIT or a life co in my 2028 or 2029 window to get out. And then I'm going to get out of everything. I'm going to get out of everything, and I'm going to take all that cash, and I'm going to go buy the small stuff. So I'm doing exactly what you're saying. I'm syndicating to do something
You're
bigger.
looking at it as a
Yeah.
short-term wealth
A,
deposit.
7-year short-term play. Yeah, 5 to 7 year short-term play. It's a good question.
Chad, you go to war with me?
Yeah. You know I got the gun. Yeah, I was out shooting.
He's not gonna be here.
I was out
Yeah.
shooting yesterday. Yeah, see, I don't know, man. We've talked about this.
We have
I don't
talked
know if
about
I'm
it.
sticking around, man.
Yeah.
It's going to be bad.
It's gonna be bad.
There's going to be a period of natural selection, right? So the middle class is getting squeezed, right? And
Yep.
there's just going to be two classes, the haves and the have-nots. And then from a financial standpoint, like that squeeze is going to create so much, like, it's just going to create so much friction in the environment that a couple things are going to happen. Either we're just going to secede, and like everybody in California is just going to do their thing, and then we're going to kind of do our thing in the Southeast. It'll be like sort of a secession type
Yep.
thing, which is what I think is probably the most.
Yeah. Well, I'm in financially, so but if you want to get into all this too, we
Yeah.
can talk about that.
Yeah,
I was talking about financially. I kind of set you up for that.
Oh yeah. So that squeeze is happening. So what's going to happen is, right? So that they're going to. It's a demoralization of the country. We're seeing it right now. You demoralize the country, then you hyperinflate their currency, and then you can basically take the country over because now it has
destroyed.
no infrastructure, it has no culture. You've beaten the culture out of it, right? And we're watching that happen. If you guys are not paying attention, the culture is being completely flipped. Everything is backwards. A man is a woman, a girl is a boy. Like it's all backwards. The whole fucking thing
By
is upside-
design, it's intentional.
Oh yeah, it's
this
all
ain't- This is
intentional.
not.
If you
this
think
didn't
this is a
accidentally
coincidence,
happen.
no,
Yeah.
this is intentional, right? They're in the universities. They own the financial sector. They own the universities. They own the pharmaceuticals. You guys think that the Rothschilds and the Carnegies and the Morgans? Do you think they went anywhere? All they did was step behind the veil. They control $700 trillion. They control all the companies. And if you follow the money, I'm a money guy. I got degrees in finance and accounting. I studied economics. I follow money. I love numbers, and I love the ones with dollar signs in front of them. And I follow money. And if you follow the money, you get the answers. It's pretty clear.
Yeah.
And you see the same corporations, institutions, families, they own, kind of have their fingers in all these buckets, the Hollywoods, the pharma, everything. And then they poison us and then sell us the solution. Like, are you guys joking? So we're going to get squeezed to get back financially. I like to tie it all in financially. But if you get back financially, they're going to devalue the currency so much so that then they can introduce the social credit system, which is going to be that their plan is to introduce this new social credit system where
What China's doing, what China's been doing.
Sure. So it's a digital currency that's basically they can control kind of how you spend your money and where you can spend it, all stuff. You'll be universal basic income, which is designed to help all the lagging people that aren't producing members of society. So those members, there'll be universal basic income, and once they get everybody on that, we're done. Like we're done. Freedom's an illusion right now. We don't really have it, and it's going to be even worse. And I don't know, man. If that happens, like my wife and I have had a lot of talks about this, and like, what are we fighting for?
Yeah.
What are we fighting for? Because the heart of it is gone. Like the culture of it is like, we want to stay and fight and rebuild. I had plans to be governor in 12, 14. I got a governor run on the agenda. So
Everything you tell is
Y'all like the same human.
I have a path through state senate or mayor and I've already started setting things up. I sat down with the mayor of Murfreesboro, and but I don't believe in federal politics, so I want to be governor because I think governor is going to have the most control.
Yeah.
Okay. And I think the governors in 10 to 12 years may be the ones that are actually in charge. Okay.
They may have to, like you said, secede.
Correct. So that's my path leads me there, provided the whole system collapses before then, which it has to, in my opinion.
Yeah.
But if it doesn't, and like it gets really bad, dude, we're bailing out, dude.
Yeah.
I'm not beholden to, like.
Yeah.
I love America. I love what it was allowed to build, but
Yeah.
she lost her way.
There's an old myth, and it said that the South is gonna. What would they say? The South is what's that old saying?
Rise again.
The South is gonna rise again, and it's almost coming to that. But
Yeah, I'm with
But
you. I just don't think people don't have the stones to do
No.
what's needed. Like, dude, these people,
There's
the people
different
that created the treasonous stuff, they need to be taken out on the White House lawn and hung or shot publicly.
listen, 200
And
years
we don't
ago.
do that. Turn the camera off. But no, they need to
200
be.
years ago, that's what they did.
That's what they did. People didn't fuck around.
If Thomas Jefferson was around today, do you think he'd be putting a
We were
George
rolling
Washington?
in our grave, dude. Fauci, dude, they need to hang Fauci in the street,
Yeah.
and people need to walk by his body and be like, "That's why you don't fuck around with people, dude." And then shit would change.
Yeah.
Shit would change if people saw that we weren't. But it's just we've weaponized the judicial system, and there's just all these games, y'all. Like I don't want to go into.
Tell
it,
us how
man.
you
It
really
just
feel.
pisses me off.
Tell us how you